This is the Power Producers Podcast, where we are refining and redefining the sales game.
Rule number one is you have to believe in yourself. You're the only one who doesn't think you belong in this appointment. The prospect has already validated your existence by scheduling time with you. Get it through your head you belong here, go in there, crush it, and close the deal.
A place where sales professionals can come to learn from other sales professionals and thought leaders that have mastered their craft.
The difference between a good salesperson and a best-in-class salesperson is only 2 minutes. By spending an extra 2 minutes on what you might think is a mundane task in the sales game, you separate yourselves from the pack, you grow your book of business, you close more deals, and you retain your accounts.
As well as their peers who are still striving for perfection to achieve their why.
I have a wife and 4 kids. Failure is not an option.
Real sales professionals, real stories, real results.
It's no different than being a professional baseball player. You can't be a one-trick pony. You have to be a 5-tool player in order to succeed in this game.
This is the Power Producers Podcast, production redefined. Are you ready to feel the power?
Hey everybody, welcome to the Power Producers Podcast, where we are refining and redefining the sales game. This next gentleman I have known for over 10 years at this point, probably closer to 15. And you're in for a treat because we are going to talk about something that nobody ever talks about, but is very important to every agency, and that is premium financing. I know that's one of Kyle's favorite things to talk about.
Oh man, I love premium financing.
Yeah, he does. He loves it.
It's super easy and seamless, and there's hardly ever any issues.
Absolutely. And just for the record, in a disclaimer, any issues that Kyle is sarcastically referring to should not be any reflection on Chris's company, because they're not his company. That's why we have Chris. So Chris McClure from Agile Premium Finance is our guest today. Chris, how are you, brother?
I'm great. Thanks. How are you guys?
We are good.
Fantastic.
We're good. We are glad to have you in the mix, man. We've been dealing with
thank you.
a lot of headaches here over the last little bit, and still cleaning up some loose ends from some of that, actually. So we are just about at the point where we are exclusively using Agile going forward, and happy about that.
I love it.
So listen, why don't you tell everybody kind of what your story is, man, where you started out and how you got to where you are today, and give them the rundown on your background.
Yeah, so I'll try to be brief. I started out of college actually in banking, and I was in a management training program. They were bouncing me around to departments, and my brother at the time was involved with MetLife, and I saw him making money, and I kind of thought to myself, where am I going to be in 5 years? Maybe I'll be a branch manager making $25,000, $30,000, with the aspiration of a wife and kids. Thought that is not going to be enough. So I took the dive, went into the insurance business, got eventually up to the point where I was a financial planner. Did that for about 20 years, both in the field, home office, and then of course in management. Got a call one day from a gentleman at one of my previous finance companies that I worked at, and he wanted to talk. And he said, look, I see you've been in Florida for most of your life. You've been in the insurance business for 20 years. I'd like to talk. And I said, okay. And we talked. And to be honest with you, I didn't know anything about premium financing. Was not on the P&C side, was on the life side. And again, investments. So we sat and talked, and I became very, very intrigued. Ultimately, they put an offer on the table. I like to joke and say it was an offer I couldn't refuse. Spoke to my wife about it, and she agreed that I should take the leap. So I gave up all my licenses and took that quantum leap. Now I've been in the business for about 15 years. So now you guys know about how old I am. And I love it. I wish I'd have started this 35 years prior, because I'm having a great time.
What do you love about it?
I'm a sales guy through and through. So I love going out and meeting people. I love talking to people. I'm not tied to a desk. I'm not tied to an office. I get to go out and really make friends. A lot of my clients have become good friends of mine where, we'll golf, we'll just talk on the phone, and not even talk business, attend kids' functions and all sorts of stuff. So it's really an enjoyable business from that standpoint. You got to remember, I sold life insurance for 20 years. Nobody liked to talk to me about life insurance. And they didn't mind talking about their retirement. They just knew it would be difficult to save enough. So it was a nice change, and it's exciting. I can't really describe it any other way.
Yeah. So here's my question. You go into all of these agencies, and I'm going to tell you right now, I think that there is a genuine issue with agencies not understanding what they get into when it comes into premium financing. Okay. I got my rear end handed to me early on, I can tell you. And there's a lot of stuff, especially because you're not really dealing with, in many cases, you're very rarely dealing with standard business. It's almost always going to be brokered in excess and surplus lines.
Correct.
It's always going to have minimum earned premium and earned taxes and fees and all of those things that go with it. Just sometimes, and maybe more often than not, it's not going to be the best clientele in certain circumstances. You got to worry about whether those people are going to pay or not. At least I can speak from a place of experience. That's what we deal with. It seems like many times we're as worried about whether or not people are going to make their premium finance payment and cancel, and then that's going to create a whole other set of issues and work and all of that. So
I think the unfortunate part about that and why that happens is a lot of the stuff that we end up having to get financed that's going through E&S is stuff that we're not prospecting. It's just coming in either via the web or, a referral from a payroll partner that, so I think that's why we run into the whole fear of them not paying. And it's just, it kind of comes with the territory. It's annoying in my opinion.
Yeah. It's just interesting you guys bring that up because, I tell people all the time that the old 80-20 rule kicks in, that 80% of your problems are going to come from 20% of your clientele. And, you have to be prepared to deal with those things. The financing portion can and should make it easier for that person to maintain their payments, to pay their insurance. If it's not, and it's not an outside factor, then it was set up in the wrong way to begin with. So that's why I really like to work with my clients to, to really make sure that their financing program is set up as a good match for their book of business. I have several clients who are working in specific markets, for example, trucking or medical malpractice. Well, each of those markets have their own certain needs and requirements, things that they like and don't like when it comes to how to pay, what they can pay. So it's really critical for me to sit down with my agencies to identify that. And that's where my 20 years of insurance comes in. I have to really do a fact find to find out what they need, what's going to make it easy for the agency, what's going to help them attract and retain business with their clients. I tell everybody, Kyle, you joked around about it in a sarcastic way, but if there's a challenge, something's broken along the way. That means whether it's from the finance standpoint that it's not set up just right, or we're not given the right terms, or it's not a competitive rate, or their payments aren't going through. I mean, there could be a million things that it is. Sometimes on our end, we don't see it. Your client comes to you, it may be something in the system that's defaulting on their end that we just don't see. So I encourage my clients, my agency partners, to really keep an open line of communication with me. I tend to follow through their first 5 or 10 financed agreements. So I make sure it went from start to end fluidly, efficiently, without any problems. That way, if a problem comes up right then and there, we can catch it, correct it, and move forward before the client, really has to see it. So yeah, that's interesting you brought that up, David.
So here's my question for you. You go in, you're going to open up a relationship with a new agency, and you have the ability to warn them about pitfalls that they could get into as a result of premium financing. What would you say 2 or 3 of the biggest pitfalls that an agency could run into are in the premium financing arena?
Yeah, it's interesting because these issues come up all the time. So first of all, most agencies are operating and allowing their CSRs and or account managers to control the whole process. You got a producer, agency principal that sells it, pops it on the desk of the CSR and says, great, they need financing, handle it. CSR has a tendency, again, they don't like change. They're busy. I get that. So they go into where they're comfortable, pop out a premium finance agreement without really exploring how it may or may not impact their customer. Meaning they look at the APR. If they feel that it's high, then all of a sudden it becomes high to the client. So if you got a CSR that really doesn't understand interest rates, how they're developed, and what it means to the customer, then it could create a potential problem for that customer. The other part of that is agency principals as well as the account managers don't really fully understand how premium finance can be a benefit to their customer. We're in a perfect environment right now. We've been talking about this since March, unfortunately. We in our industry are anticipating as these businesses start to open up again, they all have a cash flow problem right now. Because of that cash flow, with interest rates being as low as they are, it's really a good idea for them to finance the contract. When they finance, that frees up their monthly cash flow as it's coming in, and it may not be real stable at the moment where the flow is coming in. So financing will create a little bit of stability for them and allow them to continue to reopen, get their business back to where it was, if not even better. The other side of that is, a lot of these businesses do want to grow. The finance agreement shows up nowhere on their credit, unless they default, of course. So when they finance an insurance premium, and I'll use an example of a doctor who finances their medical malpractice premium for, say, $100,000. And now the doctor wants to go out and buy some sort of equipment for his office. When they pull a credit check on that doctor, that $100,000 finance agreement does not show up on their credit anymore. Okay, so essentially it's not tying up credit, which is a big deal for business people. The other part of that is if they were to go to their loan or to their bank to obtain a loan for that, rates are probably going to be higher and it ties up that credit. So by utilizing their relationship with the insurance agency, who has already established credit and a relationship with the finance company, they can literally sign a form today and their premiums are paid for them. There's no underwriting. There's no other stuff. Now, there's a caveat to that. If you're looking at really large premiums, they may ask for financials. They're going to look at some things and may have to adjust the contract terms. But for the most part, it's a pretty simple process.
Yeah, I think some of the things that I know that I have learned along the way have a lot to do with also how premium finance agreements are structured and constructed as information's getting keyed in, right? And
Correct.
So one thing about our agency is I'm the only one who does premium finance agreements. And I know that sounds weird, but I want to be in control of that because I don't want everybody and their brother to have their hand in the cookie jar without understanding what they're doing, right? So, minimum earned premium. And then even, to get into something that's not necessarily premium financing, but 100% earned premium or minimum premium on a policy, right? So you have 25% that is an automatic in almost any E&S, but then you have some that come out that it's 100% earned, meaning even if they only do half the business, the carrier is still going to keep 100% of the premium that they've collected, at 100% of the deposited premium. And so those are areas where people get messed up. I also have to believe that when you start getting into like the taxes and the fees for the stamping and the inspections and all of that, understanding what of that is earned, what of it's unearned, and all of that stuff just creates a huge rat's nest for things that could go wrong when you're putting together finance agreements, and ultimately could cost the agency money. If you have fees that are 100% earned and you don't make that the case when you're putting them on a finance agreement and a policy cancels, guess who's responsible for those fees to the wholesaler? The agency is. Finance companies got to pick that up because you didn't make the finance agreement the right way.
Yeah. What I tell every agent is, you know what? If you disclose it, you'll never be held accountable for it, assuming we issue it. So if it is 100%, and there's not many finance companies out there that will finance 100% minimum earned premium. I mean, that's
no. And I want to make a very clear differentiation. There's two different things. You've got 25% minimum earned, which is what you used to see. But I'm saying, irrespective of premium financing, there are E&S quotes, and you write those every day, right? You don't even realize you're doing this because it doesn't have anything to do with the financing. But that 100% earned premium is saying that, look, here's the quote. Here's what you said you were going to do for sales. I don't care if you only do half of that. We're still going to collect the premium for the whole thing. So that's an audit issue for the client. It's not a premium financing issue for the client. You're going to get your money as the finance company either way, and you would never know that language was in there. That's up to the agent to disclose. But I bring that up because I don't think there's a lot of agents, in many cases out there that understand that language could be on the policy. So, guys, if you're out writing E&S business and you've never seen one of those, you probably should pick up a handful of your E&S policies and look at them and see if that's on there, because you could be in for a rude awakening, especially with the things that are going on with COVID right now. There's a lot of agencies that are going to end up getting sued because they never disclosed to their client that was 100%, deposit premium policy where they can't get money back. I'm sure that the carriers are going to have political pressure to do whatever they can to buckle and go outside of the agreed upon contract. But at the end of the day, it's still a problem and something that'll surface again going forward. And, with what we're getting ready to have happen in Florida, you got to be a happy guy, man. There's going to be a lot of excess and surplus lines, property premiums that are premium financed. And I look at the current environment that we're in right now in the state of Florida, the number of carriers that have pulled out or the capacity that's dried up. We are getting very, very close to where we were in 2004 when I got into this industry, right after the 4 or 5 hurricanes had come through the year and a half to 2 years prior. Property capacity is going to be gone. We are in the middle of a massive issue right now. Auto rates suck. Property capacity is going away and the rates are going up. Experience mods are continuing to rise because workers' comp rates are being decreased. And the way that the math works, the mods go up when the rates go down. I mean, I can just keep going on and on. It's a horrible place to be if you're a client. But if you're an agency that has a good value proposition, this is a time for you to really shine and maximize your earnings. And so I think that that's understanding the premium finance piece, especially if you're dealing with property schedules and everything else. I've seen it, Chris. It can be the difference between somebody getting a deal and not getting a deal. And I'm not shallow enough in my thought process to think that everybody who listens to this podcast does business the way we do. Price doesn't enter the equation when we do business. We sell on value. But for the people who are out there selling property insurance, which is highly commoditized and typically a price-based sale, if you've got a point difference on a finance agreement on a $100 million property schedule, that's a big deal.
Yes, absolutely. And that's a great point. The hardening of the market, yes, is great for us. I'll admit it. However, interest rates are low. So that's great for the customers. That's great for the agencies because you are able to provide that additional service for your customers who might be having a challenging time based upon revenue, based upon premium increases, and that hardening of the market. My consultative approach, of which I learned on the life insurance and financial planning side, is critical when I get into this with my clients. and it generally happens with my larger agencies where we are really trying to pinpoint and identify ways to make it better. That's why we call it a partnership. My clients are not the people who are financing. My clients are the agency principals. We have to make it right for you so that you can make it right for you. And if we're not doing that, then again, I said it before, something's broken along the line. We need to drill down and figure it out. Now, unfortunately, some people will just walk away and I never hear from them again because they throw their hands up and say, this is frustrating. A lot of times, though, I find out that they didn't understand something like we've discussed here, how the contract works. Just as much as the agents need to understand how their contract is with minimum earned premiums, I would strongly encourage everybody to read their finance agreements that they're signing. That's a representation and warranty. And when you sign it, you say, I'm going to back this. If there's something that goes wrong and it's my fault, I'm going to make it right. So they need to understand when we see that signature, we're saying, hey, they've agreed to it, they understand, and they've disclosed this to their client. So, we will attempt collection first if the account goes bad and there is a need for collection before we ever come after an agent. But eventually we may have to come to the agent and ask for some assistance, either to collect it from their client and or make us whole in some way.
What's the ideal agency look like for you guys?
That's a great question. I get that all the time. The ideal agency, we call it a middle market agency. Average premium is $20,000 per account. However, I have agencies that write, $500,000 in finance premium a year, and I've had agencies who write $50 million in finance premium a year. So each one is a little bit different. And again, like I mentioned earlier, based upon their market and what they're doing. So ideally, it's an agency that is a good partner with us. We are partnering with them. They are partnering with us to make sure that we're both doing the best for their client. I kind of equate it to the old happy wife, happy life concept. I know when my wife is happy, we get along great. Everything's fun in the house. Same thing with an agency. You got the account managers, your client, the agency principal happy, everything seems to run smoothly. It's when there's not that happiness that frustrations for the tiniest of things can come out. So again, it goes back to the consultative approach and really identifying where we all need to hit the marks.
So we talked a little bit about pitfalls. What's the biggest train wreck you've ever seen on a finance deal? You don't have to, obviously I wouldn't ask you to use names, but I'm interested in circumstances because we'll get feedback from people who will say, oh no, that's nothing. We have one way worse.
This segment could be way better if we use names.
Yeah.
Yeah. So David, you wrote a policy once. No, I'm kidding.
No, I actually did. I'm sure,
Yeah. No, I've had some very interesting things. Part of my territory in my one of my previous company was Puerto Rico. Puerto Rico was a great place. Loved the people, loved the island. My favorite place to go. But they do business a lot different than we do here. So therefore, there were some, for lack of a better term, train wrecks when accounts were financed and they thought everything was great. Well, our home office didn't quite understand, and they didn't understand how we operated to really make things sorry about that, to really make things run smoothly. So had an account in Puerto Rico that was a very, very large account, had to go through multiple carriers to cover the risk. All carriers have to be on board. And if all carriers are not on board, it's very difficult to get the deal done. So we had to literally go through about 80 different markets to do the coverage. Having them all sign off, it took over 3 months to get the deal done and get it booked. That was a train wreck because I had to be heavily involved in that one. And I don't speak Spanish. So there's the train wreck.
That was the next
piece.
question. Yeah.
No, in fact, I joke around that most of the principals down there were educated in the States. They went to college in the States, and most of them spoke better English than I did. So that was the communication issue, English, not Spanish.
So let me ask you this. I don't know how often an agent's going to come back and tell you, hey, man, thanks for helping me out. You helped me get this deal done because of premium financing. Even if that's the case, I just know my peer group, and many times they just take people for granted and just keep on moving to the next deal instead of making you aware of things. But I'm wondering, since we asked you what the biggest train wreck was, what's the biggest win you're aware of as a result of somebody using premium financing at the point of sale?
Well, I'll go back to the same exact account. Again, without naming names, it was in the tens of millions in premium that we financed.
Oh,
yeah, it was a very large account, and they couldn't have gotten it done had we not done what we did, meaning jumping through hoops to get signatures from the markets. There were a lot of verification was involved because the risk wasn't a perfect risk, but we needed assurances from the markets that should a cancellation occur, we're going to get our money back. And that was the biggest issue. So, there's been word of a little bit of issues down in Puerto Rico with the money and how the government manages money. But so we needed some assurances that we were going to be in good shape. But absolutely, the principal of the office down there thanked me. We actually went out to dinner, and he thanked me up and down for getting it done because it's his largest account of the year, and he deals with it every year. And that one year happened to be a little bit challenging because of some issues the previous year.
So one of the things I think that people don't understand about premium financing is how the interest rate actually works, right? Yep. So it's not simple interest. Like you just go and take the principal and multiply it by the amount and annualize it out. Why don't you talk a little bit about that and how it how it's structured?
Yeah, well, I'm not going to get into a math lesson, but it's not a true APR because an APR is based upon 12 months. So most of these contracts are either 9 or 10 months as far as the payment terms. So that makes the actual rate that they pay far less than what they see as an APR on their finance agreement. So what I always encourage my agents to do is, if you're in competition, if you're trying to explain this to a customer, don't just look at the rate. Okay, the rate is the rate is the rate. Everybody's low right now. What you really need to look at is the finance charges. Those are the hard dollars. That's where they're going to, that could potentially make or break the sale. And you'll see that change based upon down payment, based upon number of payments, whereas the APR may not change for those two items. So
it's interesting too, man, because one of the things that happens is, as an agent, you got to go out there and explain this to your client,
yeah.
Right? And so I figured it out. Just, I'm no math whiz by any stretch, but I could tell by glancing at it, that, wait a minute, that interest rate doesn't line up. That looks way higher than what it actually is going to end up being. And so the way that I've been able to go out and get clients to understand the value in having the premium financed is, I explained to them that it's an interest rate, but it's not, simple interest. It's an APR, almost like a revolving credit line, for lack of a better term, from a structure standpoint. But I take the flat dollars that are on the premium finance agreement and I divide it by the number of installments. And I say, if you want to look at it in an easy way, here's the convenience fee that you're paying on a monthly basis. So, sometimes, if you look at it, it might be like almost 10%. In some cases, I've seen it over 10% in interest. We're not there right now, but I've seen it get there. And a client will look at that interest rate and be like, holy crap. But then you look at it and it's only like $250 off of 10 installments. I just say, look, guys, it's a $25 convenience fee for them to front the money on the front end. If that's not worth it for you, then go ahead and pay your premium in full, But I think that if you're creative in the way that you go to them and explain how that works. Again, something a lot of agents just don't do because they don't understand it themselves. You can get your client to understand that, and you relieve a lot of heartburn that you could possibly have if you don't know how to explain those things.
Yeah, and you bring up a great point, because I'll give a great example. There's people out there that will finance $1,000 annual premium. The finance companies make almost zero on that. In fact, it costs them money because of that. Well, you'll see an APR on a contract like that that's 16%, 15%, depending on the company. If you get it through a broker and their finance company, you might see 25, 26, 27%. But that looks high, but look at the dollars in the finance charge. On $1,000 contract, it might be $80 for the year. When you place it and explain it that way to your customer, say it's only $80 for the year, they look at it and they kind of have that sigh of relief and go, oh, okay. But as you also are well aware, except for the really high dollar finance premiums, most people don't really get into that unless they want to know what their payment is. It's like people buying a car. What is my monthly payment? Oh, if that's too much, how can I bring it down?
Yeah, look, I'm not even gonna. I hate to even admit this, but the only brand new car I've ever bought for myself, I walked in at 21 years old and said, I can afford $400 a month. What can I get? Awesome negotiating strategy. I ended up.
It was like a Mazda Miata.
It was not. It was an Isuzu Amigo, and it was a 5-speed. I had no idea how to drive a stick. I was in West Virginia.
Is that one of their like small SUVs that they had, or what was that?
No, it wasn't small. It was more like.
But it was the SUV though, or midsize or whatever, right?
It was more like a Jeep than anything else, but it wasn't
Okay.
shaped like a Jeep. It had a soft top on it that you could pull off.
The old Amigo.
Yeah, I may or may not have had a couple of 15s in the trunk, and it may or may not have been the perfect size to where you could have a person in the front, a person driving in the passenger seat, and then it was a bench seat in the back that was 3 deep, but you could have put one on each side, and a keg fit perfectly right in between those two people. And we may or may not have driven up and down the main drag in Morgantown, West Virginia, serving beer into solo cups from a keg in the back of that vehicle.
Yeah.
Those are all things that may or may not have happened.
Sounds like a good business opportunity.
It may have also been very profitable.
How can I invest?
And your sales career began.
It was way earlier than that, man. Yeah, it's funny. But I mean, it goes back to it though. You're right. People look at things, and a lot of the time it's just tell me what my payment's going to be. And as long as that fits in the budget, they're good. They don't give you a lot of pushback. But again, you get to something that's $100,000 or more in premium, there's some meat on the bone there, and financing can make a big deal. And so I think that the agencies out there that haven't taken the time, look, whether it's Agile or any other finance company, if you're like me and you dread when the premium finance people cold call you, it might not be a bad move to take a meeting.
You just hurt my feeling.
You're not cold calling me. You're already in. But I have 15 others of you that come in, just walk in my front door all the time. And so I think that part of it too is because people get in a rhythm of using, one product over and over again. We're going through this right now in the agency on other service providers. I've got a service provider that I've used for years that has basically been the backbone of a lot of what we've done in our agency. Shame on me for being so blindly loyal that I didn't explore other options. And, it ended up being that an opportunity presented itself to where I was ready to look for some other options to see what made sense out there. And once I started digging in, I found out, holy cow, man, I'm really have been operating with blinders on. There's some really cool technology out here that I can use that I haven't had access to. I think the same thing holds true to premium financing, man. We don't want to deal with it. When somebody gets into our agency and we can aggregate as much premium with that one group as we can, it's very difficult for a guy like you to get a foothold with us because we have so many other things that are going on. My challenge to every agent out there is if Chris McClure shows up at your agency, take the meeting, right? You need to hear what other people have to say. And if you've never had your team go through training with regards to premium financing and you can't tell me what that agreement says from left to right, front to back, top to bottom, you need to have somebody come out and educate you on how this stuff works, because you're in for a rude awakening if you don't.
Knowledge is power. And, I used to have a sales manager when I first got into insurance sales that, you can make it as easy as you want, or you can make it as difficult as you want. And I still use that with my own kids today. A little bit of preparation up front makes things really easy in the long term. And that has to do with, all sorts of business, but especially with my stuff here, because you're talking about hard dollars. It's important. It's coming out of your client's pocket. So you need to make that process as painless as possible for them as well. So yeah, absolutely. I've trained many agencies. I've trained groups of, 2 people up to groups of 50 people and larger, actually. It's important that they know. And every time I see that aha moment with people where they didn't understand or they didn't realize that there were certain things that was actually a benefit for financing from the client standpoint, not even to mention the benefits for an agency principal that we haven't even really got into at this point.
Yeah, so let's talk about this for a second. We're running up on time, so I want to be respectful of that. But talk for a second about how premium financing is actually a bona fide revenue stream for an agency. I think that's the other thing. There's 2 things I want you to talk about. That's one of them, because I don't know how many agencies really pay attention to the level of revenue that you can generate from premium financing. You're not going to get rich off of it, and be able to retire tomorrow, but it could be a substantial amount that's coming in depending on your mix of business. That's number one. And then number 2, I know that you're relatively new in your role with Agile. You and I've worked together in the past. And so that's why you're in our agency now, is because of that relationship. But I remember at one of your predecessors, and I'm wondering what Agile's stance on this is, there were some benefits to the agency that they could use to use that premium finance company to go out and finance things like office equipment or furniture or some of the other things that they would need to scale their agency, and they would use a premium finance company to do that. I don't know what Agile's stance on it is, but in general matters of speaking, just address both of those 2 things, if you don't mind.
Okay, so let's address the first one, revenue. Yes, there are a few agencies out there, and it's much more now that actually take revenue off of that than used to in the past. But it's a direct to your bottom line revenue. There's nothing that eats into the profit. It is, A plus B equals C. It goes right to your bottom line. I have several agencies that will utilize that for Christmas parties, Christmas bonuses, office equipment, as you said, vacations, other bonuses for things, luncheons for their agents. It's a revenue source. And what's happened over the years since I got in the business, premiums go up, and oftentimes commissions will be reduced from a carrier because they want their profitability too. Well, now all of a sudden, if your commissions are reduced, but your premium goes up, was it a wash? Did you want it to be a wash? Most people say no. When premiums go up, they expect to make more money. Well, if they weren't financing before, that's when I get a ton of phone calls that say, hey, I want to start looking at this financing thing, and how can I make money off of it? So there's several different ways you can utilize it. Generally, it is a increase in the APR. So we charge our clients, which is our agency partners, a certain APR based upon the size of the premium. So it's tiered. Smaller premiums are higher interest rate, higher premiums are lower interest rates. And on top of that, you can charge up to state limits, whatever the law is in your state. If you can get a fee in your state, you can charge up to a certain percentage and you keep the difference. So we get our cut, we set it up how we know we're going to be profitable. And then anything on top of that that you are willing to earn or can earn, God bless you, go get it. Now, part of the things that I do with agencies that I've talked about before, some agents just want to get a point on top or get 2 points. Some finance companies will not allow you to take over a certain amount. this is where the consultative approach comes in. We need to sit down, really look at your book of business, identify sweet spots, identify where you're paying too much, where you're not earning enough, and really analyze your premium financing so you can maximize the revenue that is coming off of that book. Second thing. Go ahead. I'm sorry.
No. Finish up. I thought
okay.
You
So in relation to your second question that ties right in, and I mentioned it briefly, is that revenue can be used for things, business expenses. You know, it's just shifting money from one side to the other. Finance companies, I should say some finance companies are willing to what we call is prepay that revenue. So we'll sit down with you, analyze your book, look at how much revenue you're going to earn off the financing based upon your productivity. And let's say it's $50,000. We'll give you a check up front for $50,000, and then you earn it away. You earn the debit off that credit throughout the year. So that's kind of a nice feature as well if you need a little extra cash right up front. By the way, there's no interest on that. It's just, you know, you're essentially borrowing the money. Now, if you don't meet the obligation, if you don't do all the things as part of the agreement, then there will be charges that come to you in the form of interest and whatnot. So that's awesome. Some finance companies also, because they're owned by banks, can actually provide financing for an agency to buy a book of business, buy office equipment, you know, purchase a standalone building if they're big enough and ready to grow. But you know, the smaller the agency, the more those are like personal loans, and you got to look at it a little bit different. The larger the agency and the more revenue coming in from your book of business, the easier that is to obtain. Most banks, if you went down to your bank and asked them for a loan to buy a book of business, they don't know how an agency book of business works. They will look at it and say, okay, well, you've got all this revenue this year from, you know, 10 million in premium. What if all those people don't do business with you next year? You don't have 10 million in premium anymore. How are you going to pay us back our loan? So again, they don't understand that. And we all know the retention's way, way higher than that. And it's likely it's going to happen. In fact, in most of your cases, it's going to grow. You know, we're in business to get bigger, better, and better. And, you know, they're going to grow. Because we're owned by a bank, our bank gets it. You know, our bank is willing to look at those things. Now, it does have to go through a full underwriting process. So we're going to look at everything for the agency principal and or partners to determine, you know, what's the strength, what's the credit rating of this agency, and are they willing to do it? So, and that is the same for all the finance companies who provide lending for agencies. So, you know, those are a couple different ways. The number one thing that we see is either an acquisition and or just a book of business. Those are the highest things that we see, especially when we're in an environment of mergers and acquisitions. So
yeah, what does that look like? If I were to go out and buy a book of business, what do I have to put up for you guys to be able to have you consider giving me the money for it?
You know, again, each one is underwritten individually. So generally, the rates are, you know, prime plus 2, prime plus 1.5, depending on what you're purchasing. Terms are generally a 10-year term, but it balloons in 5 years. So it's a 5-year deal, which if at the end of 5 years you want to re-roll it, rewrite it, it has to go through an underwriting process again. But that's generally how it happens. Happens less term years, higher rates sometimes. Again, it just really depends. It depends on the amount of money too. But generally, you're looking at probably 10, 15, 20, sometimes even more down, and the rest financed.
And are they underwriting the actual book itself to see like how long that it's been in place, what kind of retentions there, you know, all of that stuff? Or are you just basically relying on the agent to make a good decision? Because I know a lot of my peers have made bad decisions in acquisitions before.
Yeah, haven't we all? It's a combination. You know, we'll pull credit reports on the principals. We want to look at their personal credit. We'll ask for financial plan, what your cash flow personally looks like. But then we also look at the agency cash flows. The agency upside down? Does the agency owe back taxes? What is the retention on the book? How long have you been in business? Do you owe money to a landlord, or are you in your own standalone building? What's your growth been? There's just so many questions that are asked, and every bit of it comes into play. You mentioned before, David, and it was something I was going to get to. A lot of agencies out there will have 2 or 3, and I've seen 6 premium finance companies that they utilize. They let their account managers go to the cheapest route. So the finance companies are also always competing on rate. That's great for their customers because they're gonna wedge rates down over time until they hit a certain point. So that's awesome. However, from a premium finance standpoint, just as you have relationships with your clients and you want to capture all of their business, we would like to do the same thing. When we feel that it's a true partnership, now rates, terms, that 100% earned premium might be something we would look at based upon the amount of time we've been in business and things that we've done. If we think you're just going to shop it to your other 2 finance relationships, sometimes we're like, fine, let them have it. It's a bad risk. We'll let them have it anyway. Whereas if it's 100% loyalty, then we have a tendency to lean your way and say, okay, let's get it done. Let's help you, our business partner, to make sure you're getting the deal and able to maintain it.
Absolutely. Well, listen, man, we've been going for a while.
Yep.
I'm sure you're going to have people who want to reach out to you and pick your brain on
Sure.
financing. Tell them how to find you.
Okay. You can reach me by email at cmcclure, that's CMCCLURE, at Agile, AGILE, -PF.com. cmcclure at agile-pf.com. My phone number, my direct phone is 727-543-3162.
Awesome. Chris, really appreciate your time today, man. Look forward to growing our relationship with you.
Yes, sir.
I've already got a couple wins under the belt and look forward to just the long-standing relationship in the future. People, if you don't know premium financing, this guy does. Listen to what I tell you and reach out to him. He will make you better, I promise. Everybody, have a great day. We'll catch you guys later.
Thank you.
You've been listening to the Power Producers Podcast. You can follow Killing Commercial Insurance on Facebook and YouTube. And if you want to take your game to the next level, check out our book, The Extra 2 Minutes, and our website, killingcommercial.com.